Well, hello there. How are you? Welcome to Ensuring Your Well-Being. I am Dennis James, the biking, dancing insurance man with various insurance planning. I am the independent insurance advisor, and I'm going to be bringing a really interesting topic today, and you're going to enjoy it because you're going to learn something that takes place every year. And what that is, this is November 7th, and guess what? It is called National Long-Term Care Awareness Month. So they have that every year, and the reason is they want people to be in tune with long-term care insurance and why it's so important to understand. And so it is to observe, celebrate, reflect, Now, a lot of people don't know what long-term care insurance is. What that really comes down to is as we get older, you don't have to be, but in most cases, it is where if we live a long life, we become fragile. And sooner or later, we may need some help. All right. If you look at what's going on here, this is 2024. I see a lot of, and I'm sure you do, independent living studios going on, assisted living facilities. And that means that with 10,000 baby boomers born every day, followed by Gen Zs and millennials, if you don't die, and eventually you will, but you live a long life, you're going to need some kind of extended care planning. That doesn't always have to be, right? It can happen at any age, right? With MS, ALS, a bad accident where you need help. And so anyhow, I was reflecting on this, and I'm thinking, why they picked November for awareness with long-term care insurance nationally. And November, December is normally, right, when we're getting together with friends and family, during the holidays, and we're taking some time and we're reflecting on, the past, the present, and, what's going on in the future. We don't know what the future brings, all right? But at the same time, right, we're going to have discussions, and everybody's at a different stage in their life. But life insurance, long-term care insurance, annuities, those are all things that should be important in your planning. All right. When it comes to long-term care insurance, just so you know, you can get a plan all the way up to, really up to 100. But I'll be talking about traditional plans. Those are normally at about age 79. And a lot of the other plans like hybrid life, or those usually can go right to about 85, just depending on the carrier. And then there's some annuities that can go to age 89. And there's also this membership plan that doesn't really matter. It's a home health care plan. It goes over 100. But so, here's the thing, when you're talking about, because we're going to have good days, happy days, sad days, not so good days. And so, things you have to ask, what is it? A lot of times they'll use the term extended care planning versus long-term care planning. And it all means the same thing, right? But a lot of people, when you think of long-term care insurance, you think in the nursing homes. Well, the reality is when you have a plan, it keeps you out of nursing home, even though it does cover it when you have any kind of a comprehensive plan. All right, and there's questions that you have to think about, right? If there is an extended care event, right? who's taking care of you? You know, who's taking care of your mom or your dad or your grandma, your grandpa? Who's doing them right? If they need help with getting around. So that could be just the activities of daily living, right? Think of like bathing, dressing, eating, toileting, continence, transferring, right? These are things that we do every day, but eventually, right, when you need assistance with six of those, that's where a long-term care insurance plan will start paying. Or cognitive, right? We also know that with dementia, Alzheimer's, right? And that is, I just had somebody last month, Deborah Ross, talk about that. That's on my website right now. And she was an expert on explaining that. All right. But that's the other way where you qualify for a long term care insurance plan. Because it becomes real, right? When, you're getting a lot of times during the holidays when there's a discussion about that, right? Kind of like I mentioned, who's going to do that? Now, it may not happen to you, all right? But if it did happen to you, what's your plan? All right. Can somebody lift you up if you fell, right, off the floor? Can your wife do that if you're in your 80s, 90s? You don't have to be that age, but I'm just saying, who's going to do that, right? So, these are things we don't want to look at or talk about, think about it, but we also have to be real with our who we are and our loved ones, right? Because what ends up happening, it becomes emotionally, physically, financially a burden on everyone, right? And so those are things to look at. A lot of times we'll say, well, my kids, well, depends, all right? Where's your kids live? Are they living around you? Are they living in another state? Do you want them, if you have 3 kids, who's gonna do it? Are they all gonna take turns? Do you know that for sure? Do you want them to do that? All right. They become caregivers, right? And so, sometimes that works, sometimes it doesn't. But over a period of time, it can get really tough. And so, that's the things you have to consider. Who's going to be an informal caregiver? Is it going to be a friend or a family member, right? Suppose you're a single person. I mean, who's going to take care of you? Do you have somebody that is going to take care of you, help you? Those are things, that you have to think about, right? So when we talk about national long-term care insurance, where it's to raise awareness on the significant impact it makes on people, right? So, when your loved ones don't have any choice but to take care of you, right? Because they're going to if they love you, and vice versa. So, that's why you think about planning, and it's always better sooner than later. 70% of men and women that turn age 65 today, right, 70%, they're going to need some kind of long-term care insurance. And, right, so, and that's, again, you have to understand. I was going to talk to you a little bit about the cost of care, all right, just to bring some awareness to a lot of people don't know. You could go to variousinsuranceplanning.com. I do have the care information down there, but just to kind of give you an idea, and this is like national, these rates that I'm going to give you. But as an example, if you have a homemaker service where somebody's going to be coming in, and this is based on over 44 hours per week, where someone's coming in and doing homemaker service, and really what that is, that's where they're cleaning the house. They're cooking some meals for you. They could be taking you to the bank or to the grocery store. Cleaning, that type of thing. The cost is around $5,700 a year. I'm sorry, a year per month. I mean, if you add that up, that's around 68 grand per year. All right. So that can be expensive. Now, if you need a homemaker, home aid, and that's where, remember, I mentioned to you about where you need some help with activities of daily living. Maybe that could be the bathing, or you need somebody to help feed you, right? Or going to the bathroom, that type of thing. All right, that's where home health aides come in, right? That's where they're going to give you assistance to make sure you don't hurt yourself. That's like hands-on assistance. And that's right around $76,000, depending, again, what state you're in, but that's what it would be for 44 hours a week over a 1 year period. All right. Now, adult daycare centers, a lot of that becomes a nice benefit. I also have somebody that had talked about adult daycare centers, quality daycare, and that's Jackie. She runs one of them, and her cost, all right, is $125 a day. All right, and that's where you're taking a loved one and you're dropping them off for the day. All right, and usually that could be anywhere from 9 to 4, and that's where they're gonna feed them and kind of like look after them, have them play games, get artistic, that type of thing. Now, so if it's 125 a day, that's $2,500 a week, or add that up. All right, that's $30,000 a year. All right, now that's not bad, but you got to consider your time going there, every day. And now assisted living. All right, so those vary, but right around 53 to 6 grand per year, right in there. Could be a lot of times that's for a private room, or it could be where you're sharing it with somebody. Those rooms vary, all right, but that doesn't count for a lot of other things. That might count for your meals and that type of thing in your room, some of the activities that take place. I know, like as an example, my own mother was at independent living to assisted living to basically memory care, where she ended up dying. And I realized that really got my attention, how expensive that can be. I guess the blessing behind that, my mom had a good pension, and and put away some money, so she was able to have those services taken care of. Unfortunately, I was not in long-term care insurance at the plant, and nobody ever, approached me on it, so I didn't know anything about it for me or my mom or my dad, for that fact. And that also goes with my mother-in-law, right? So all those get very expensive. Now, if you get into nursing homes, like I said, you want to stay out of nursing homes. But if you're having all that home health care services, like I mentioned, that's 65 to 75 grand today in today's dollars. Nursing homes, if you're looking at a semi-private room, it's right around 102 to 104,000. And it can go anywhere from 110 to 120,000 in a private room in a nursing care. And only certain ones qualify, when it comes to Medicaid and that type of thing. So they, and that's, all those types of services add up, right? So that's what Jen's worth. But I mentioned how you could go to my website, and I do have those services where they break down for you. So, things to consider. All right, now, as far as long-term care insurance available, they're available for the individual and the work site. I mentioned that there's a lot of carriers today that, especially because of the baby boomers, Gen Zs, millennials, that are in the market. So you have a lot of good options. There's something that is affordable for everybody. If you're dealing with an expert that focuses on long-term care insurance, especially if he's an independent insurance advisor, he should be able to give you a lot of good options based off your needs. All right. So also work sites. There's been like 10 life insurance carriers or carriers, long-term care, that have come into the market here for 2024 because of the need. And so one of the things you want to think about, different types of, there's long-term care insurance. There's what they call a traditional, all right? It's kind of like, those are really good plans. They're comprehensive. And so it's going to cover you for at-home services. It's going to, any kind of facility. That means independent, facility, assisted, memory care, and even nursing community, the adult daycare center. It's kind of like you carry auto insurance, homeowners insurance. It's the same thing. Traditional plans usually are the most cost effective. There is underwriting on all these types of plans that I'm discussing. And it also has what they call partnership state qualified. So I'm going to have a separate conversation on that at another time with a podcast. But really what that is, let's just say you have a $300,000 benefit, right? So you use that whole $300,000 of benefit, and then you're going to go to qualify for Medicaid, right? So what happens is that $300 will be part of your estate, all right? So that you don't have to spend down to use that. So that's going to be part of your assets that you get to keep. And you really only do that with a traditional standalone policy, all right? So real nice benefit there. That a lot of people take for granted or don't understand. You have auto, homeowners, liability insurance. Think about it. When did you use that last? All right. What's the chances of using a long-term care insurance? I mentioned that, right? 75% of the people will. That turns 65. So I'm sorry, 70%. Then there's what they call different names for them. It's called asset-based life insurance with long-term care insurance. It's hybrid life, so that's with long-term care insurance. They call them linked benefits. That's where you have life insurance linked to long-term care insurance. Now, those are nice because you're going to use one or the other, right? So you get life insurance, and you also get either it's going to be a long-term care insurance rider, or it's going to be what they call extension of benefits, all right, which is for the long-term care insurance. Now, when you go to use those plans, if you never use the long-term care insurance, and let's just say you have a $500,000 policy, well, $500,000 goes towards your beneficiary, right? You die, you got protection. Right now, you keep in mind you're paying for life insurance when you have these types of plans. All right, so sometimes if you don't need life insurance, just depending, usually traditional plans can make sense, right, for people that qualify for any of these plans. Let's see, and then they have so if you, as an example, let's just say you have like that 500,000, you use 250,000 towards your long-term care rider, right? Now you got 250,000 of life insurance, but you also use 250,000 towards your long-term care insurance or your rider. Then you can have what they call an extension of benefits. You could maybe, because you're always going to use the life insurance portion first, all right? unless there's a residual. Sometimes you can have like, where it'll be for 25,000, no matter. Even if you use everything, you still have 25,000 a death benefit. And it depends on the insurance carrier when I'm talking about all this. All right. What else? A lot of these have what they call chronic illness riders, critical care riders, chronic. So, how I mentioned the ADLs, right? Activities of daily living or cognitive. They have some of these riders where you pay for them, or you don't pay for it, but if you don't really know how much you're going to get though if you go on claim, right? So you will pay, and it's going to be based off when you are on that, you qualify for using the long-term care insurance. That chronic illness rider can kick in, and you just don't know what your death benefit is going to be, right? So it's based off your age, your gender, and when you had this, when you qualify. So sometimes that cannot be so good, but it's better than nothing. All right, that's what I would say about that. You have to, your insurance advisor should be able to explain all these different good options for you based off affordability and, what you feel the need and what you qualify for. Then there's annuities. All right. Now, annuities, the thing with them, your health can be kind of, maybe you're not in real good health, right? So it's a way of taking some of your non-qualified money. If you do that and you roll it into a tax-qualified annuity, that would be for long-term care insurance, the Pension Protection Act. You would not pay taxes on it, but you're using it as long as you use it for qualified long-term care insurance expenses. All right. So if you have a non-qualified plan, you're not going to really use it. And let's just say, you started at 100,000 and it grew to 150,000. When it's set up as a qualified annuity, the cool thing there is you're not going to pay taxes on it, right? So, because you normally would when you go to take that money out of that annuity if you didn't, right? But if it's money that you don't think you're going to be passing on to loved ones, beneficiaries, you don't need it for your lifestyle. It's a great feature that's going to give you some long-term care insurance. And some of these annuities, all right, you can have different nursing confinement riders on it. You're going to, pay a certain amount for it, but those are riders that can be attached to your annuity. And let's see, and then there's short-term home health, short-term plans, and that could be like where you just have a home health care plan, or it could be strictly a facility type plan. Those are normally a year, but if you don't use it, all right, or let's just say you don't use it for 180 days, it will restore all the benefits of it. A lot of advantage of those types of plans is easy to qualify. 2 or 3 medical questions, maybe 2, and basically the questions are, are you in a nursing home, or do you have dementia? You wouldn't qualify then, but it's very easy to qualify. And the other thing is they're very cost effective. A lot of those plans you can get up to age 85 and they become affordable, and as I talk to you about this, really, what's really important is having something in place, right? Think about it. Insurance carriers, right? You might as well put them on the hook for it, right? It's pennies on the dollar what you're spending. And if you don't believe me, just get some, have some professional run you some rates, and they can show you if how much, if you're paying in and what kind of benefit you have, right? We know that insurance carriers are very smart. They know what the actuaries are. They know who's going to go on claim, who isn't. And so why not utilize, people that have a lot of money, right? They use other people's money, other, carriers, etc. So just a food for thought there. And a lot of these plans have some kind of what they call care coordination, right? So you go on claim, or a friend or a loved one, right? You're going to want to know where I can go, So as an example, let's just say you have a long-term care insurance plan. All these carriers, they have what they call care coordination, where you could, once you put in the claim like that, they're gonna put somebody that can help you with all those services, right? Because when you're having emotional, financial, physical problems, you might as well have somebody that's going to assist you. So there's care coordination is a big deal. And there's a lot of independent people too that are out, would be around you, that can help you also when it comes to, getting, finding a facility, that makes sense, because that's what they do. They're experts, with that. All right. I wanted to mention something about, I'm going to wrap this up pretty quick. Things are going quicker than I thought. Benefit periods. These are the things you think about, is 2, 3, 4, 5-year benefit period. So there's one insurance carrier, a couple insurance carriers that'll cover you for life. And then you want to know the amount. All right. So as an example, right, we were talking about that a little earlier, right? So if you need, let's just say you have you have $6,000 a month, right? And over $6,000 a month benefit, and you have that over a 1-year benefit period, that's going to give you $72,000 per year. All right, so if that's the case, 72,000. So you could pick a 3-year benefit period, or 4 or 5, right? So if you pick the 3-year, right, you're going to have 260,000 benefit that can be used for any kind of home care, assisted living, or any of the facility care. Okay, adult care centers. A lot of times you would have an elimination period calendar year. So what that means is that once you go on claim, you got kind of like health insurance, right? You got to wait elimination period 90 days, and then it kicks in. But once you go on claim, so if you start on day 1, well, after 90 calendar days, you're going to be covered. All right. They also have 180-day, but 90 is the most popular. Then you can get inflation on it. Inflation's going to, usually that's going to be a 2, 3, 5%, right? So that keeps up. So let's just say you're taking out a claim today, and you're, just say 40 years old. All right. You don't go on claim for, right, 20 years, 30 years. Well, by having inflation right around there, it's going to keep up with the cost of dollars, 30 years from now, as an example. You have to look at the cost on that, though, right? The bottom line is having a good benefit amount in place. A lot of times, you're just, you're going to self-fund some of it, which is fine, right? A lot of people do that. Why not? Right, but you want to, the thing is, right, without a plan, then you go on claim, then you have to ask yourself and really be real about it. Okay, what am I going to liquidate first, right? Is that going to be the 401k? What's it going to be? All right, and we talked about the costs on that, right? It's today's dollars, right? I mean, you're looking at $60,000 to $100,000 per year, so and you have to think of all the other things, when you don't have a plan, right? It's every dollar you spend is going to go towards care. And, when you have a plan in place, instead of your loved ones, like your kids, taking care of you, okay, instead of that, you're going to have the support. Your kids will be the support of it versus being the caregiver. Right, and a lot of times that can be challenging, obviously, and when we talk about families breaking apart, is a lot of that is because of that. Hey, Mary's taking care of me, but Jim and John aren't doing anything, right? So it gets sticky that way, right? We don't think so, but the reality, it happens more than we would want it to happen. All right, I talked about that. Now, also worksite benefits, all right? That's another thing. Those kind of plans can be portable. They can be a guarantee issue or simplified issue. You can, let's just say your employer, a lot of those are those hybrid life with the long-term care insurance riders, and they can be very cost effective. There are tax benefits to all this, especially if you're in business. There's tax benefits. I'm not going to get into all that. I'll do that another time, but there's tax deductions for that. All right. So, especially if you're S Corp, C Corp, that type of thing. Based off age or where you're at. Great way to insure yourself using the business, as a above the line tax deduction, that tell you as a sole prop and that type of thing. But, talk to your advisor. You could go to my website. You could contact me. I have lots of information on it right here. All right. So, all right. I think that is going to be about it. I think one of the things, I'm going to wrap it up, I would just say I have a lot of experts. If you go to www.variousinsuranceplanning.com, you could talk to experts that talk about Alzheimer's, the home health care, life insurance, long-term care insurance, annuities. If you need a good accountant, you want CPA, you want information on that, as an individual or business owner, they're on there. Home health care agency, adult daycare centers, wellness. You got the Bike and Dance Insurance Man that talks a little bit about wellness from his history of martial arts and ballroom dancing. There's ways of staying healthy and fit by doing what you should, doing. And I had somebody talk on nutrition and cancer, so all those things. Let people know about the website, variousinsuranceplanning.com, and it's a great place to go for information. We're there to help people, all right? That's what I want you to get and understand, all right? So thanks for tuning in. Wish you a blessed day, and God bless. Take care.